Hi, and welcome to this week's Stock Scores Market Minutes video. This week we're going to talk about charting support and resistance. Let's get right into the analysis. All right, so the classic method for defining support and resistance is to simply draw a horizontal line across the highs and lows on the chart. And this is the way I always did it 20 years ago, even 10 years ago. That was sort of the focus for support and resistance. And I see many technical or chart analysts still doing it that way. What I find, however, is that in this market, because the market's more and more efficient, there's more and more people using chart analysis, it's actually more useful today to also consider trend lines. And I'll show you what I mean, the difference, in just a moment. Support and resistance really represent the sort of minimum and maximum price that investors will pay or accept for the fundamentals of the business at any one time. And I would say that trend lines sort of take that concept one step further and add in the emotion, in that trend lines represent the investor mood of the market, the psychology. Is the market optimistic or pessimistic? So here's the first chart I want to look at. This is the chart of the U.S. oil fund, basically tracks with crude oil. And this is an intraday chart going back 30 days where each candle is 60 minutes. We're just going to draw some lines on here. So in the classic sense of where support was, you could draw a line of support here. That line was broken there, and you can see that price moved down. And at that time, you also had resistance here. If that market had broken up through resistance, we would expect price to move higher. And that's sort of the typical way that you would use support and resistance. Now, trend lines are a little different. We draw trend lines across rising bottoms or falling tops. So we could draw an upward trend line like that. We could draw a downward trend line like this. So there, the downward trend line was broken. We had a little bit of upside weakness. And then that little short upward trend line was broken, and we ultimately led lower. So my point is that by using trend lines, sometimes you can get into these positions sooner. You could also draw an upward trend line like this or like this. The more times a line of support or resistance is touched, the more important it is. Now, once a market is trending, in other words, moving up or down, then we can draw the upper and lower boundaries of its price channel. We've talked about this in past weeks, where we would do something like this, and over here something like this. And when you break out of the channel, you expect either sideways action or upward action. And if we had an upward sloping trend, let's say over here we had an upward sloping trend, and then that trend is broken, we expect downward price action. So that is the way that I like to draw support and resistance, given sort of the greater efficiency of the market and how things are going. So what about oil now? Well, we could draw a line of resistance right there. That's our horizontal line of resistance. We've hit that now. We also have an upward trend line of support, and we've broken the downward trend line of resistance. What basically is happening now is we broke the downward trend line this week. We are now building a rising bottom. We actually had a little rising bottom there as well, but here we have a rising bottom. And if the market next week can break through this, well, that'll be another bullish sign that this downward trend is over. If, however, the market gets stuck here and then cruises back down, then it's likely that we'll move down towards support, which is now there. All right, so that's how I would draw it on the intraday chart. Let's look at the longer term weekly chart. And again, if I'm going to draw support back here, it's not going to be a horizontal line. I would draw it like that, slightly rising from left to right. Now, the old classic way would be to draw a line of support like this, which was broken just a couple of weeks later, but you get a little bit more profitability out of it when you use trend lines. Then we had a horizontal line of resistance here, but what's important is that we are still in a long-term downward trend on oil. It's not as steep. This is actually a pattern called a falling wedge. You can see that the slope of the downward sloping trend line there is steeper than it is on the bottom. That means that the sellers are getting tired, I guess, as each wave down, I'll show you this in a moment, so each wave down is getting less and less intense. That is what defines a falling wedge pattern. And if we break to the upside through that downward trend line, we should finally break the long-term downward trend in oil. Still lots of work to do, but at least making a step in the right direction. All right, let's get into this week's analysis. Here's the 30-day, 60-minute chart of the S&P 500. You can see that the downward trend line has been broken this week, and we're now building a rising bottom here. If we can break up from that rising bottom, that will be a positive that the market's going to start to recover. It's not there yet. We've seen this before. Here we had a downward trend line, and it was broken, and we kind of went sideways for a while and then rolled over and went lower again. So we could just as easily roll over and go lower again. However, if early next week we get a break through this little price peak right here, well, then we should start to take out these other price peaks. So that's what you want to watch for early next week. Here is the weekly chart of the US S&P 500, and basically what's happened is we've come into horizontal support right in there. We actually went through the August lows. You can see we were slightly lower, but we did not close lower. On a closing basis, we basically held this closing, I always like to look at the bodies of candles. I think that's more important. And you can see that we've held that line of support well so far. Somewhat expected, however, because that is support. We hit it here, we hit it here, we hit it here. So you would expect the market to bounce there. The question now is whether it holds that, or does it go up for a couple weeks and then roll over and start to move down again? One of the important things with this chart is that we've got a falling top here, and falling tops on a weekly time frame, when that long-term upward trend line has been broken, those are strong signs that we are actually entering into a longer-term bear market. So we want to be careful. It's not over yet, but certainly we are threatening to break that long-term support from a falling top, which would be a negative, or at least negative if you're bullish. Here is the Russell 2000. It broke its downward trend this week. This is a daily chart. I chose to use a daily here. You can see it had a dead cat bounce candle there where we hit a new low, came back to close at the open. That was the day when the market was down over 500 points in the morning, came back to close above the open. That was really a good turning point signal, heavy volume on that particular day. However, when you look at this, yes, it's a break of the trend, but it's not a break from a rising bottom. So it still has work to do. It won't surprise me if we get some volatility in here and then maybe make a stab at moving back up. Still lots of pessimism to overcome. To me at this point, it's just an oversold market bouncing back. It's not an oversold, or it's not yet a reversal of a long-term downward trend. It is just early stages trying to bounce back from being oversold. Here's the TSX 60 intraday, and you can see here there is our downward sloping trend, downward sloping channel. We broke that little rising bottom here. Let's see if we can get up through there. The critical thing, of course, for the TSX is what oil does. We'll get to the oil chart in just a minute, but it's a step in the right direction. I just don't think it's out of the woods yet. Here is the TSX on a weekly time frame, and again, long-term horizontal support from way over here. That's back in 2013. That's basically what it's bounced off of. Again, hit a new low early in the week, came back to close at the highs for the week, well above the open. However, still well below that downward trend line. So really, this is just an oversold bounce. It's what happens is when markets get oversold, and by oversold I mean they're far away from the trend line, they eventually come back to the trend line and then bounce off of it. So right now we're here. My expectation is it comes back to the trend line, and then it's going to have some real good fundamentals to break that downward trend line. And for that to happen, I think we need to see oil make a real rebound. TSX Venture had a little bit of strength at the end of the week there, but still, pretty ugly market. It's going to take some time for this to turn around. The energy market, the mining market, very depressed, obviously, and so lots of work to do there. I would still be very cautious with that market. Treasuries had made a bullish break last week, or the previous week, right there. That's a break from a pennant, upward trend into the pennant. You expect the break out. Of course, that means interest rates are going down. However, with the bounce back in the market, some of that money that was going into the safety of bonds came back. Probably people bargain hunting in the stock market. I still think that this is a market that wants to go higher, which is somewhat bearish for the overall stock market, I would say. And again, that theme is that the stock market had a good showing at the end of this week, but it is far from out of the woods. Here's the US dollar. It is in a little, I would say, an optimistic price pattern. We had that bullish trend, a pullback, and now we're trying again. It failed to make a new high there, and that's something that's a little bit worrisome. Basically, this is now a pennant pattern. Not bad. I'll draw this a little bit better for you here. A pennant pattern would look like something like this. And so if we can break out of that pennant, that means US dollar going higher. Breaks down out of the pennant means US dollar going lower. Critical for commodities, of course. If the US dollar breaks higher, that's going to make it tougher for the oil market to recover. Gold in that long-term downward trend. Short-term, it had a little bit of life this week, but the long-term trend is still bearish. I would call it neutral on the very short term because it's been showing a little bit of life over the last 2 or 3 weeks. Here is oil. We already discussed this, and basically it's coming off of a low. It hasn't built a rising bottom yet. This chart still has lots of work to do before it can be considered a reversal. So as a trader, I'll trade the volatility there, but I wouldn't take longer term positions just yet. I think it's still too early to do that. Fear took a hit on Friday as the market recovered, but the trend here is still up. This is basically a pullback from a high. It could come back here and then just continue right back up again. So don't be so sure that the weakness is over. Step in the right direction for the market this week, but it needs to make more steps in that way. So my ratings, I'm neutral, short and long term on US stocks and Canadian stocks. They're at long-term support. They showed a good bounce. That's a positive, but by no means am I bullish on either time frame yet. Gold, bearish long-term, neutral short-term. It's been bouncing around a little bit. Same thing with oil, still long-term bearish. It's still in that long-term downward trend, but it is trying to bottom. We had a pretty good bounce Thursday and Friday, so that is positive for oil, but only in the short term. The market's made the oversold bounce this week, and there may be more upside in the short term. Pessimism is still strong, so it is too early to call a bottom. Traders can take advantage of the volatility. If you're a day trader or swing trader, it's great. But as an investor, you really need to remain cautious because there's still lots of pessimism in the market. Oil is the key. You need to watch that chart the closest, and it still remains in that long-term downward trend. Well, that has been the Stock Scores Market Minutes for January 24th. Have a great week in the market and trade well.